It's one of the most heated, enduring debates in modern history, a conflict that survived revolutions, toppled regimes, drained treasuries, and divided the world into opposing camps. For more than a century, capitalism and socialism weren't just abstract ideas. They were behind every political speech, every labor strike, every market crash, and every geopolitical standoff. This argument shaped the societies we inhabit today. But here's what no pundit ever admits. Neither system unfolded the way the textbooks promised, not once. Not anywhere. And when crises struck, war, famine, economic collapse, reality exposed the flaws in stark detail. Welcome to modern economica, where history, money, and human ambition intersect. And nothing is ever straightforward. The story of economic struggle begins long before the terms capitalism or socialism existed. For most of human history, people weren't thinking about profits or production. They were thinking about survival. Kings ruled by divine decree. Nobles controlled land and resources. Ordinary citizens labored just enough to stay alive. Life was a constant balancing act. If one person gained, another lost. Wealth came from land, labor, and conquest. Productivity grew at a glacial pace, and the notion that merchants or artisans might amass fortunes through trade or invention would have seemed absurd. For centuries, human advancement was incremental, precarious, and dominated by hierarchy. Then the Industrial Revolution erupted, transforming the landscape of work and power. Britain in the late 1700s became a cauldron of coal, iron, innovation, and restless ambition. Machines replaced human and animal labor. Workshops became factories. A new force emerged, the force of private capital. Suddenly, ordinary individuals could own, invest, and take risks on a scale once reserved for money. Productivity surged. Some workers saw wages rise. Others sank into deeper misery. Inequality expanded at an unprecedented pace. Cities became smog-filled. Child labor was common. Disease spread in overcrowded slums. Yet for all its brutality, one undeniable truth emerged. Capitalism generated more goods, more wealth, and more speed than the world had ever known. The birth of socialism was a direct response. It was not a utopian fantasy, but a reaction to industrial capitalism's stark inequality. By the mid-19th century, thinkers like Karl Marx and Friedrich Engels observed factory smoke, labor protests, and the toll of endless work. They concluded that the system itself was unjust, that capitalist wealth was theft disguised as opportunity. They proposed an alternative, collective ownership of factories, shared profits, and production aimed at human need instead of private gain. They imagined a society free of exploitation, immune to boom and bust cycles, governed by rational planning and equality. To workers living under the gears of early capitalism, this vision felt like justice, clean, moral, and achievable. Yet ideas alone do not shape reality. The first larger-scale attempt at socialism came not in academic treatises, but in the ruins of an empire. After the 1917 Russian Revolution, Lenin inherited a nation devastated by war, famine, and illiteracy. The Tsar was gone. The elite fled or were executed, and 150 million people needed an entirely new economic system. The Soviets implemented state control over land, factories, banks, and resources. Bureaucrats set prices. Production targets replaced profit motives. Private enterprise vanished. In theory, equality and efficiency would flourish. In practice, chaos ensued. Without market signals, planners misjudged demand and production. Without competition, innovation stalled. Without personal incentives, workers did the bare minimum. Chronic shortages became routine. Agriculture collapsed into famine. Lenin eventually allowed limited private trade just to sustain the nation. Despite failure, socialism remained enticing. Capitalism, too, was struggling. By the early 20th century, industrialized nations had generated immense growth, but also extraordinary instability. Speculation ran wild. Monopolies dominated markets. The wealthy lived in opulence, while millions barely survived. Capitalism excelled at producing wealth, but failed to distribute it. The gap between rich and poor widened dangerously. This tension erupted in 1929 when the U.S. stock market crashed, triggering a global catastrophe. Banks failed. Unemployment soared to 25%. Nations watched financial systems collapse. For many, capitalism did not merely appear flawed, it seemed lethal. By the 1930s, observers realized the uncomfortable truth. Neither system delivered what it promised. Socialism preached equality, but produced scarcity. Capitalism promised prosperity, but delivered collapse. World War II became the ultimate stress test for both systems. The Soviet Union, despite ineffectiveness, mobilized its population with speed and discipline, leveraging state control to channel resources toward survival. Capitalist nations, particularly the United States, transformed into industrial powerhouses, demonstrating the might of private enterprise when coordinated for national purposes. After the war, metrics like GDP, infrastructure, and living standards replaced ideology as measures of success. From 1945 to 1991, the world operated as an experimental laboratory. On one side stood the Soviet bloc, a tightly planned economy with state dominance and limited markets. On the other stood the U.S. and allies, practicing regulated capitalism supported by social safety nets, shaped by Depression-era lessons. Millions experienced the consequences firsthand. In the Soviet Union, industrialization advanced rapidly. Illiteracy fell. Housing expanded. Military power surged. Yet structural cracks were inevitable. Without market pricing, inefficiency became systemic. Factories met quotas by producing low-quality goods. Farms yielded rotten crops. Innovation stagnated. By the 1970s, the USSR lagged decades behind in consumer technology. A nation capable of building rockets struggled to produce refrigerators. Capitalism, by contrast, adapted. Post-Depression reforms introduced banking safeguards, antitrust laws, social security, public health care, and unemployment support. Capitalism didn't become perfectly fair, but it became sustainable. Its flexibility became its strength. By the 1980s, the contrast was undeniable. Western nations saw living standards rise sharply, while the Soviet Union stagnated. The Cold War's outcome was not determined by ideology but by performance. When the Berlin Wall fell in 1989, it was not military defeat that collapsed the Soviet system, but economic dysfunction, empty shelves, perverse incentives, and stagnation. A system designed to eradicate inequality had produced a new elite. Party officials and bureaucrats, while ordinary citizens queued for basic necessities. A rigid, planned economy could not withstand its internal contradictions. The result was unambiguous. Productivity, innovation, and adaptability had favored the West. Capitalism's triumph, however, was not absolute. While Western economies thrived, the system's contradictions never disappeared. By the 1990s and 2000s, capitalism evolved into something its 19th-century architects could hardly have imagined. Global finance expanded dramatically. Supply chains spanned continents. Credit flowed with unprecedented speed. Inequality surged, reminiscent of the Gilded Age. Corporations became transnational powers. Entire economies grew dependent on speculation, debt, and asset bubbles. The 2008 financial crisis demonstrated that capitalism's instability was not gone, it had only transformed. Meanwhile, socialism resurfaced in altered forms, not the rigid command economies of the Soviet Union, but softer, more pragmatic approaches. Nationalized healthcare, free education, stronger labor protections, and progressive taxation. Younger generations, squeezed by housing costs and stagnant wages, began to question whether capitalism served them at all. The debate revived, but the contours had changed. Few advocated for pure capitalism or pure socialism. History had clarified the trade-offs. Scandinavia, often mischaracterized as socialist, provides a case study. These nations embrace free markets, private ownership, and global trade. Yet they pair these with high taxes, robust social protections, and strong unions. It is capitalism with guardrails designed to limit inequality without stifling innovation. Compare that with the United States, a capitalist powerhouse of invention, global influence, and financial depth, but facing stark wealth gaps, aging infrastructure, rising healthcare costs, and a shrinking middle class. And then there is China, the world's largest authoritarian capitalist economy. Beijing labels it socialism with Chinese characteristics, but in practice it is state-directed capitalism. Private companies drive growth, yet strategic sectors are controlled by the state. Markets function only when aligned with national priorities. Even China faces contradictions: debt-driven expansion, housing bubbles, demographic decline, and slowing productivity. Stepping back, the pattern is clear. Every major economy today is a hybrid. Markets and state power coexist. Incentives blend with protections. Freedom merges with regulation. Ideologies did not fail. Reality demanded compromise. Human behavior, ambition, greed, fear, laziness, creativity interacted with economic systems in unpredictable ways. Economic theory alone could not dictate outcomes. History teaches that systems adapt or collapse. Capitalism endured because it reinvented itself from to the New Deal, to global finance, to tech-driven capitalism. Socialism faltered where rigidity persisted, as in the Soviet Union, Maoist China, and North Korea. Socialism succeeded when paired with markets, as in Scandinavia, post-1978, China, and portions of Western Europe. Ideology alone did not determine winners. Adaptability did. At its core, capitalism prioritizes incentives. When functioning well, it unleashes creativity, entrepreneurship, and productivity. People innovate because reward motivates risk, but the system carries costs, inequality, cyclical instability, and vulnerabilities for the marginalized. Socialism, conversely, prioritizes equality. When effective, it reduces poverty, expands access, and ensures a baseline of dignity. Yet, without incentives, productivity slows. Without markets, information becomes opaque. Without transparent institutions, corruption festers. Both systems offer benefits and bear risks. Both have left scars. The modern world, our workplaces, cities, institutions is built on those scars. Safety nets, regulations, market rules, and welfare programs all reflect lessons learned from the century-long struggle between systems. Mixed economies do not signify a victory for one ideology. They testify that neither could thrive alone. The debate continues into the 21st century, shaped by unprecedented challenges: AI, demographic shifts, climate change, energy transitions, and global debt. These forces do not respect ideology. They expose weaknesses in both systems. Market-driven economies struggle with long-term planning and social cohesion. Centrally planned models face obstacles in flexibility and innovation. The nations likely to succeed will combine the strengths of both: private initiative guided by public strategy, market creativity reinforced with social resilience. Freedom without stability is unsustainable. Stability without incentives is stagnant. The lesson is clear. No economic system operates in isolation, and no society prospers when power concentrates excessively, whether in billionaires or bureaucrats. Ultimately, history is less about capitalism versus socialism and more about control, adaptation, and resilience. Power over capital, state, institutions, labor, and markets remains the central issue. Systems change hands, yet human nature persists. Under pure capitalism, ambition can drive progress, but also exploitation. Under socialism, the quest for equality can inspire unity, but also repression. Power concentrates through wealth or politics, but the underlying human tendencies remain. The enduring question is not which system is inherently superior, but which framework best restrains abuse, corrects errors, and incentivizes positive action. History demonstrates that adaptability, not ideology, determines success. In the end, modern economies reflect compromise, not conquest. They are hybrids, born from necessity and tempered by experience. Capitalism, with lessons from the Great Depression, post-war reconstruction, and globalization, persists because it adapts. Socialism survives where markets complement planning, achieving balance between equity and efficiency. The struggle between these systems is ongoing, but the narrative has shifted. It is no longer a battle of absolutes, but a constant negotiation of trade-offs informed by history, human behavior, and circumstance. The past century has shown that the real measure of an economic system is not ideology, but its capacity to evolve and endure. But here's what most people overlook. The debate is evolving once more. The challenges of the 21st century, automation, demographic shifts, climate emergencies, energy transitions, and mounting global debt-ignore ideology. They reveal the vulnerabilities inherent in both systems. Market-driven economies struggle with long-term planning and social cohesion. Centrally guided models stumble over flexibility and innovation. The nation's best position for the future will be those that blend the two, harnessing market ingenuity while leveraging public strategy, combining private creativity with collective direction, balancing freedom with stability. If the last 100 years taught us anything, it's this. No system functions without checks. No economy thrives without incentives. No society prospers when wealth or authority becomes overly concentrated, whether in oligarchs or bureaucrats. History did not select capitalism or socialism. History selected the mechanisms that prevented collapse. Each generation must redefine that balance. Because the conversation has never truly been capitalism versus socialism, it has always been about who holds the lever's control over capital. The state, the banks, labor unions, corporations, political parties, and regulators. The true struggle is always over power. And as history demonstrates, power does not vanish. It merely shifts. If this perspective opened your eyes, subscribe now. Understanding the past illuminates the future, and I'll show you where to find the answers.